Equity Bank Group has posted a 12% profit after tax for the first half of 2024 to stand at 29.6 billion shillings. The earnings attributed to a growing customer deposit which stands at 1.3 trillion shillings in the first half. The bank has also attributed the growth of earnings to its subsidiaries, which contributed half of the lender's net income in the half year. But as Jimmy Mbogoh now reports, the bank saw a decline in credit disbursement as non-performing loans surpassed the lender's guidelines.
For the first half of 2024, Equity Group is reporting a 12% growth in earnings to stand at 29.6 billion shillings. The group's consolidated balance sheet also grew, driven by growth in deposits, which grew to reach 1.30 trillion, an 11% growth, reflecting a robust regional growth, with subsidiaries contributing significantly to the lender's bottom line. However, despite the growth, the lender's loan disbursement reduced by 3% to stand at 791.1 billion shillings. The bank was forced to contend with an elevated non-performing loan ratio of 12.9%. This increase in bad loans forced the lender to increase their loan loss provision by 35%, from 6.2 billion shillings in half one of 2023 to 8.5 billion shillings in half one of 2024.
Now, entrepreneurs are rational. They came from borrowing at 13%. Central Bank started offering 17, 18. So we were competing for deposits with the public sector at 17, 18. So banks increased interest rates to 18, 20, 24 to match the market conditions. And of course, what entrepreneurs do is to postpone borrowing. And that explains why Kenya specifically is down 7%.
What actions are we taking to stem the NPLs for Kenya? So firstly, you've seen the trends overall have started to come down, specifically following our policy and risk appetite. We maintain a diversified portfolio across products, sectors, segments, customers, to ensure that we do not have all our eggs in one basket.
Equity Bank subsidiaries now hold 47% of the group's deposit and loans, contributing upwards of 55% of revenue, highlighting the lender's success through regional investment. Following the lowering of the best lending rate by the central bank, Equity has announced its intention to extend the benefit to customers by further cutting down interest rates on loans.
Equity has been quite considerate around what do we charge the customer, and we've intentionally lagged our interest rate to the market. As the pressures on interest rate came through, we ensured that we lag that behind so that we get to support the customer to where the average loan interest now is at 13%.
A review of the yield 91 days rate has moved from 16.38 to 15.8. So essentially, our customers can look for a reduction.
Although Equity Bank has not announced exactly when it intends to reduce its interest on loan for customers, the bank says it intends to cut that rate by at least 50 basis points. This is double the reduction from the central bank. Jimmy Mbogoh, Citizen TV, Nairobi.